Momentum has released its latest South African household financial wellness report covering the 2021 to 2022 year. Essentially, it found an improvement in financial wellness following difficulties experienced during the COVID-19 pandemic. But this will bring little cheer to consumers today who are battling with higher inflation and interest rates, with the economic consequences of persistent load shedding as well. Well, to unpack their report and to discuss how the condition of the consumer is today, I'm joined by Jacolize Meiring. She's an economist at UNISA. A very good afternoon, Jacolize. So give us an overview of how the consumer fared in the period under review of your report, and just give us some clarity as to the actual time frame that you're covering.
Good afternoon. Yes, we've been running this survey in collaboration with Momentum now for the past 11 years. We are talking to households on a national representative survey of approximately 2,500 households each year, and to find out from them what is happening in their finances and talking to them about financial behavior aspects, etc. So with our research, the time frame, yes, it's an indication for 2021, the score that we have, but the reality of consumers, as you just mentioned, has not changed so much in the past year, and even in some senses has become even more dire straits, given the structural constraints that we have in the economy, given, as you just mentioned, we have high inflation with high food prices, high fuel prices, etc. We are seeing load shedding and the impact of load shedding to productivity, to job creation, and a lot of our consumers actually not being able to put food on the table. So that is the reality of consumers today.
Absolutely.
If I can just give a little bit of components of our index, just a quick background, we look at 5 components to get a holistic view, so a complete view of our finances. We look at the households, their income, their net wealth, their living conditions that they reside in. Then we look at their education level, so what empowers them to basically be able to get a job, etc. And then also their sense of personal empowerment. Do they actually feel in control of their finances?
So, Jacolize, if we look specifically at 2022, we know that, here we've been reporting about the higher inflation situation. It wasn't just a South African phenomenon, but a global one. So what have households told you around how they've been behaving in light of the higher inflation situation that we experienced in 2022? Yes, it's tapered down now since 2022, going into 2023, but we are still faced with a lot of higher expenses that are not always reflected well in the average inflation rate.
Most definitely. We've actually asked our households to say what we've incorporated into the science of financial success, to ask them, what would you say if you need to give advice to your fellow households? What would you say for households to do in order to take control of their finances? Because there are certain things that households can do that are within their own control. And with that, we've come in the report, we've elaborated on 5 money moves. Basically, first of all, look at decluttering your financial expenses. So that comes into what everybody's trying to tighten their belts, look at what they're spending on, etc. That's our first thing. Usually everybody say, get a budget, etc. But we say, let's go beyond that. Try to make savings a habit, even if it's so small. If you start small, in the end, you have the wonderful thing of compound interest. Then gain momentum by adding some additional income sources, those side hustles, or selling something as an additional source of income, but also looking at your passive income. So if you can have your money, if you are in the fortunate position to do that, have your money work for you. Then we also have a very important one. Remember, pay off your debt. Do not fall into that debt trap. And something that's very close to UNISA's heart, obviously, is education. But not just in the form of scholarly education, but also financial education. make sure that you understand the financial terms. Make sure that you understand, what does inflation mean? You hear this term inflation, but do you really understand that it actually means a change in the prices compared to a year ago? And how do you basically talk the talk and walk the walk when it comes to becoming more financially savvy and smart with your money? Because we need to take control of our finances because of outside circumstances are in dire straits.
Jacolize, we're running out of time, but I wanted to say very quickly, I mean, that advice is great, especially for your more middle class type of income bracket. But we know that there are grown adults who have, you know, families who have 2 or 3 kids that earn 10,000 Rand a month, and it must be impossible for them to save. And in some instances, we hear about people going to loan sharks, going to banks to borrow money just to survive, just to get over the line. So given that, what sort of advice would you give to them? And also, what's the prognosis for the consumer this year?
Well, advice to our lower income earning households, we've actually, when we are in field and basically sit down with the households, you'll be surprised at how money savvy our lower income individuals actually are. But I think for them, I completely agree that the reality is sometimes that the only way to go about is to actually go to a loan shark. But before going to a loan shark, try to see if there's not something that you can do to create additional income. Try to see if there's not something that you can try to resell. Think about being creative, because that's something that our South Africans do have. We are a resilient nation. And then basically to 2023, what we can expect, from our side, we do not see a large economic recovery. So our consumers are in dire straits. Another project that we run together with Momentum is a Consumer Financial Vulnerability Index. And with that, we speak to key informants that are working with consumers on a daily basis. And they still expect additional 2 years for households to actually recover from the shock of COVID-19 and on their finances.
Jacolize,
so 2023, I think it's tighten your belts.
Yeah, quite sobering indeed. But thank you very much for your insights there, Jacolize Meiring. She's an economist at UNISA.